Welcome back, everybody. Today we are going to be going over forbearances, Galen.
Yes. What is a forbearance, Louis?
A forbearance is when a property owner is delinquent on their mortgage, right? And what they want to do is put that amount that they're delinquent, maybe be 3 months, 4 months, 6 months, 7 months, a year, whatever that number is, they want to put that amount at the back end of the loan.
Yes, that deferred delinquent amount.
Right, deferred delinquent amount. And look, they have to qualify for that, right? So that's why we're going to get deep dive into this right now.
Okay, let's go. So
why would a borrower do it?
Well, there's a few reasons. One, they're experiencing some temporary financial hardship, right? They got to prove that it is only temporary. Next thing is that they have the ability to continue making those payments.
Good stuff.
Again, they got to be back on the workforce. They got to show some pay stubs and show the lender that they have that ability to make those payments.
Nice.
And of course, they got to have that desire to save the property. They are always thinking, I want to save my property and be able to continue to move forward.
Right. Where are we going after this?
There is a qualification
I like
process
it.
with that.
So look, you have to prove your financial hardship, right? Or else you can't qualify for forbearance.
And it must only be temporary.
Yes, must be temporary. And then you have to go, you have to be defaulted on the loan.
Correct.
Right? Because we talked about that in the first one. And then meet the debt ratio, Galen. What is the debt ratio, Galen?
So typically, most lenders will have it at a 40% of debt to income. So you want to make sure that your debt does not exceed 40% of your gross income.
Nice. And then the process, Galen.
Yes, so the process. So one, they got to contact the lender. You're going to submit documentation, maybe hardship package, showing that you're temporarily in that situation. Then you're going to go through a forbearance agreement between them. Remember, different terms apply depending on the different lenders. And then if everything goes well, it gets qualified and approved, you get a notice of rescission.
Wow. Okay. And then what would you say the pros and cons would be? Let's get into the pros, right?
Yeah, you tell me some pros on this, Louis.
So look, the pro would be you get temporary relief with your mortgage payments, right? And the property owner recovers financially without being in foreclosure.
Yes.
That's really important. So
yes, it sounds great, but there's some cons, right? So there's payments that may be accumulating. They may think that their payments are just going to stay the same, but not necessarily. They may accumulate, and that amount does not get forgiven. It must be repaid.
Good stuff. Yes, guys.
Yes.
And this was a good take on what we were talking about.
Correct. Yes.
All right, guys.